let me dispel the stock market for a minute. It is the biggest farce and lie. Here's why. First off, let's say that you had 100 grand and you lose 10%. Now you're down to 90 grand. But then you turn on the news and they go, it's rallied, we're back up 10%. Where's your account? 99,000. If they didn't charge you fees, they still took their fees during that time though. So you're not even back to break even, right? But here's where the biggest concern I have is, two major concerns, okay? We're at the second longest period of time in our history as a nation without hitting a recession. Second longest. We're pre-2008 levels with everything, with the stock market values, the debt levels, like it's looking really pretty bad. Now they've said they're not going to raise interest rates again, which is once again putting a Band-Aid on this. It could, go longer. But here's my even bigger concern than that. In the Fortune 500, more businesses will go out of business in the next 7 years than in the history of the S&P. Right? So if we take the S&P 500, here's why. How many businesses had no fundamentals yet they sold for $1 billion? How many businesses within 18 months did they get all of a sudden public notice? And like Uber had a bigger fleet than all the taxis. Airbnb had more people staying in Airbnbs than the hotel, right? Like they didn't even have to go build that infrastructure. Technology is going to disrupt these companies because that big of a company has a long time before they fire enough people, before they turn things around. It's hard for them to be super innovative because of all of the bureaucracy that exists in there. And so here's where the greatest lie in the stock market is. Let's say that I own an index fund in the S&P 500, and one of the businesses goes out of business, right? So they're gone. They're done. My value, maybe it was Enron, it's now a zero, right? Not worth anything. They're going to take one of these innovative, high-growth companies and replace it. Hey, this one's now qualified for the S&P 500, and they're going to run the numbers and the averages from that day forward as if I own that stock, which I didn't. I just lost all my money. They should be running, or I lost 1/500th of my money. They should be running that as a zero forevermore. But instead, they replace it with a better stock that's doing better numbers and tell me that that's what my average rate is, but it's not, because I didn't own that stock. Now we have the volatility factors that when it goes down and it comes back up, they say that it's back to, it's now rallied, but it hasn't got me back to even. Then we have all the fees, but here's the real issue. They want us to think it's a safe game and it's an okay game to play. They're a lot like Vegas. Like if you went to Vegas today and you sat down and you played poker and you start winning and you're like, I'm so good at this is going so well. But you didn't know that everybody at the table were the former champions of the World Series of Poker, and they were simply bluffing and they weren't playing until you put enough chips on the table. Then they would eventually play, take all your chips, and you'd go, I lost my money. But the reality is you didn't lose your money, you transferred your money. The money didn't go away, they now have your money. And so every time they say that there's going to be this time where they're going to say $1 trillion was lost in the stock market or in retirement plans, not lost, transferred to someone else that was in the know. And for us to think that we're going to beat people with teams of analysts and that have enough money to move the market,